Trading Market Technicals morning call video for Wednesday, December 11th. Markets took a break yet on Tuesday. Dow Jones down 52, Nasdaq down 8, S&P down almost 6, and Russell down 10. Kind of quiet. The markets are starting to kind of unwind. I think a lot of the fund managers and portfolio managers starting to close their books. It's a little premature, but I do see volume starting to kind of diminish here, and stocks are really not moving quite well at the moment. I think looking for a direction here, and I'm going to show you some levels that we're looking for. It looks like that we may get a little bit of a push to the downside, but I think the downside is going to be limited. We come into some seasonal strength right around the 15th of December, so keep that in mind in the back of your head. I do think that that will probably end up pushing higher one more time once this little pullback is over. So let's go right into the charts. Again, keeping it really simple. Really not much has happened. It's been very, very quiet. A lot of news. The biggest news is going to be next Tuesday and Wednesday when the Federal Reserve meets. That's going to be the biggest event risk, probably the rest of 2013. All right, so let's just go right into it. Bullish percent SPX. We are on a sell signal. Now we're starting to deviate away from that 8 EMA. So to me, this tells me that this is a concern, and this is why I'm saying that we'll probably get a little bit more of a pullback. Now, I'm going to show you some levels in the E-mini S&P once we get through the indicators. Take a look at the stocks with the 52-week lows. 52-week highs, excuse me. We continue to make lower lows and lower highs. Again, this is a concern. This is what I'm watching, these indicators, specific indicators, to see when we, in fact, actually reverse, or when the market starts to get, when the indicators pick up a little bit more to the downside, telling me that we might have a little bit of a deeper downside correction here. But again, that's yet to be seen. We're just kind of sluggish and kind of chopping around at the upper end of the range here right now. Okay, New York Stock Exchange, new high, new lows, and again, as you can see, we continue to make lower lows and lower highs. We're still above the zero line, which is bullish, but this is not a bullish momentum in this indicator. Making lower lows, lower highs here, I'm really not liking this too much. If we were going to hold, we should be actually continue to rise, even in a stair-step pattern here, but right now that's not happening. Stocks above the 50-day moving average have actually turned bearish again, and we are at these levels where we usually get a sell-off, and we have crossed to the downside yet again. So choppy price action in this indicator, but this is also pointing lower to lower prices. Okay, the VIX here, sitting here right at the lows. Extreme complacency here. That's another red flag if you're a contrarian, right? This year telling us that nobody's fearful for the market of a pullback, and they think that the Fed is going to continue to accommodate. Okay, take a look at the CBOE. And as you can see here, we have literally since the latter half of the year been at this low end of the put-call ratio, which closed bullish at 76%. So no fear at all in the markets here. So that's another concern. Might not be a concern right now for 2013, but for 2014, I definitely would be looking for any clues that this market may be ready for a pullback. And we're stuck here at the upper end of the range. Now, when we get into the chart segment, I'm going to show you these couple of areas to watch, and why I feel that if we do break to the upside, that we probably will test the highs. Lastly is gold. Now, gold is having a good oversold bounce here. 1261. Get a few emails. Where do you think what good spot to be looking to short gold? Me personally, I like to see it back at the 1288, 1300 area. If we can get another 2 days of this pulling up straight. Now, once we get to the price area here of resistance, we don't just look to short it, right? We need a trigger or some sort of a reversal that's in your trading plan, why you would be looking to short gold, and where would you be managing the trade. Me personally, I like to see a reversal come in, take out the previous candle's low, and then of course your stops would be above the 50-day moving average. Real nice and easy to manage. And if you're wrong, you're wrong, and then you would give it another shot somewhere at the right shoulder here. But let's just see where gold is. Right now, I wouldn't be short gold at all at these areas. And also, gold comes into some seasonal strength, as well as the precious metals. They come into some seasonal strength from December, January, February, and March. So that's another reason why I'm a little hesitant here. I do think gold sees lower prices, probably down to 1,000 to 1180, and that's this lower end. That's the low here. Okay, so let's just keep an eye on it and see where it goes. Remember, just because price gets to your point, don't look to short it or buy it, obviously, until you have a trigger. All right, so let's go right into the chart segment. In these monthly, as you can see here, this is not unrealistic before the end of the year. I hate to say it, and this is the 1272 extension from the March 2009 lows. Absolutely insane that we have actually took out highs from 2007 and now actually at the now getting to the 1272 extension. So again, way overextended, but we do have some bullish symmetry on the moving averages, the 8, the 20, the 50, and the 200, all pointing to higher prices. A lot of support down below, so I wouldn't be looking to fight this market at this moment. But again, you have to be really cautious here going into 2014. All right, trend is up, remains up, and that's what we should be doing, is looking to buy stocks. Now the problem is, and I've noticed that we're buying stocks, you're buying quality stocks, and then stocks don't move. That's a lot of complaints I'm hearing from a lot of traders. You're buying a stock for the day, the stock moves up, 5, 8, 9, 10 cents, and just stays stagnant, and then 2, 3 blips in the S&P, and the market rolls back down again to where your areas are, because we do have lighter volume now going into the end of the year. So that's another thing you have to contend with. Okay, so here's the really overall target for 2013, excuse me, would be this area here at 1845. Does it get up there? I'm not sure, but at least that's going to be the target area if this market wants to move higher again. Okay, so we are now met on a daily chart, 1272, 1618, and now here is going to be the next target. So the 1840, and then between 1830 and 1840 is going to be the target for 2013, if the market decides that it wants to challenge the highs. Now, let's go into the hourly chart, and as you can see here, we're down about 50 cents in the pre-market session. 1797 is my area here. You can see a really good, valid trend line here, and here resistance, now support, broke back down again, and now back up again, and now this is going to be the area 1797. If we decide that we want to break below, your next area is going to be 1774 to probably 1780ish area, right in this area here. That's going to be the downside target. Okay, so maybe we want to write that down. Upside target, first of all, we have to challenge the highs, obviously at 1812.50, and once we break that, now if we take out, this is where this comes interesting here. If we take out this prior swing high here at 1807, okay, this is the area that I'll be watching if the market has a little bit more upside momentum. If we take out 1807, you can't rule out the fact that we're going to challenge the highs here at 1812.50, and if not exceed it, okay? That's what I'm looking at, this prior swing right here, 1807, break up higher, then we're going to challenge the highs. All right, and then if that's the case, you should be looking for pullbacks into support areas, some good quality stocks that have actually, either just pulled back or kind of paused. Now, crude oil, a lot of emails. Broke out for the 200-day moving average. Yes, great bullish price action, but to me, this needs a break. I would never buy up at these areas here. Way overextended. Even if it pulled back to the 34.5 area, even 34.75. But to me, I'm looking for a deeper pullback back to this channel area of support, and then look to start accumulating USO going into 2014. Okay. Here's the GLD back into the neckline. Now you can short GLD here if it takes out yesterday's low. Okay, if it takes out yesterday's low, I'd be looking for a short. You can. But me, I'm looking for a little bit more of a quality setup because of the fact we'll come into some seasonal strength in the metal. 124.20 would be an ideal spot, and then fail on that previous candle low, and that's what I would be looking for, a short with a stop above the candle. Okay, so that's what I'm looking for in GLD. Spiders, as you can see here, we're just kind of chopping around to the upside. Absolutely no movement in the last week or so. Again, Dow Jones, yes, sold off 50 points, but really no weakness at all. Spiders are holding up relatively well. Qs are holding up relatively well, and that's a good sign that this market may run one higher one more time. Dow Jones, the diamonds here, a little bit more weakness than the other, and also the transports here, bear flag in the transportation sector. If the transports start to break down, then this is going to take everything else with it, okay? And that's also a good factor of oil. Now, if oil does start to sell off and retrace just because of the big run it had the last week and a half, then transportation sector could have another shot at least of the highs here. But right now, bear flag, challenging the 20-day moving average. If this does break down, expect the other sectors to follow. And that's what I'm looking for today. I'm looking for some continued weakness, at least in the morning, and then we see where the market goes here. But at least in the morning, I'm looking for a continued weakness here. Now, here's a Russell, another one of our leaders. Good gauge of risk, right? Risk on, risk off trade. This is actually challenging the 20-day moving average as well. So if you have the Russell at the 20, challenging its 20, you have the IWMs challenging its 20, and then you have the bear flag in the transports. To me, I think that's it's a sign that we might have continued weakness here, at least for the morning session. Okay, XLF, again, another bear flag. They just signed into the Volcker rule at the FDIC and the SIPC as well. So let's just see how the banks hold up. I still like the banks on any weakness to accumulate the banks. My favorite is JP Morgan. And Goldman here acted really, really well. It was down in the pre-market and shot up on the guidelines that they posted. Wasn't so bad that they expected. And again, at the highs here, I would like to see it back over here at the 164-ish area, right up in this cluster, right up in here. And then that's the area that I look to buy, start nibbling into a position in Goldman Sachs. Now, JP Morgan, same thing as you can see here. Nice, beautiful, beautiful bull flag pattern. Low volume here, as you can see, low volume absolutely just tapered off. That's a perfect classic example of a bull flag. And we just broke out of it, but then we came back in. We're still at the end of this range. Even if it to chop around a little bit more and just kind of getting out of it, I'd be looking to buy JP Morgan here. I like JP Morgan, and I think JP Morgan and the banks will probably run into the end of the year as well. And as you can see, Bollinger Japan starting to tighten here. So this is a classic example of a perfect bull flag, accumulating stocks pausing here at the upper end of the range, holding the gap area of support here. So nice to see JP Morgan here. All right, and then we have the networking sector, part of this technology, kind of waning a little bit, as you can see here. And this could be, you look at it, we're kind of pinching here in the Bollinger Bands as well. So keep an eye on this. Again, still valid here in this bearish pattern here, this slanted neckline here. But it's going to need to break down soon, one other way. Either break up or break down again to really get going. This has been a big snorer, actually, the IGN sector, the ETF. Apple holding here, holding true, but it looks like a little mini bear flag pattern here, right? Just a little small little bear flag here. I personally would not be looking to buy Apple here. I would rather see it on some sort of a pullback, back down to this area here of 538, 540 area, and then kind of reevaluate here. But holding true to the 8, so that's still bullish. But again, too risky for my blood. I'm looking for more of a pullback here to buy into Apple. And then lastly is the Qs. Okay, guys, it's going to get quieter and quieter, but I do think in between the next couple of weeks, between this week and next week, we should see some excitement here, especially going into the FOMC, the Fed, 2-day Fed meeting. Okay, so just keep that in mind. And again, I'm looking for some weakness here early on, and then let's see if the market can muster up another push higher and alleviate this this current small little consolidation to downtrend that we have in right now. Remember, again, we are coming into some seasonal strength coming into next week, so just keep that in mind if you're looking to get short. Have a great day. We'll speak to you tomorrow. Take care, everybody.